NIO is gaining popularity every day. Although it has a reputed name in the whole world, it basically belonged to China. And rumors are saying that it has grown so well there that people are comparing it with the Tesla of China. What's the whole truth? Let us find out. Hello friends, welcome back to TechSan. Today, we are going to discuss an interesting topic. Here we are going to find out if is NIO really going to become the Tesla of China. Stick with the video and watch it till the end to know everything about it. Let's begin. When it comes to electric vehicles, NIO is aiming for a big chunk of the growing industry. Despite fierce competition, the EV startup is experiencing a recovery in deliveries as new models are released. Is it time to purchase NIO stock as it attempts to bottom? NIO, founded in 2014, has since delivered phenomenal sales, earning it the nickname Tesla, TSLA, of China. NIO also produces high-end electric cars, much like Tesla. While Tesla produces its own electric vehicles, NIO works with a government-owned automaker. China has the fastest-growing EV market in the world, and Tesla faces competition from newcomers like NIO, Xpeng, and Li Auto. Both domestic EV and battery powerhouse BYD and global automaker Volkswagen are making headway in this industry. Newest updates on NIO. NIO shares soared on September 12 after a Deutsche Bank analyst reaffirmed his position as the top China EV choice for the company. The following year will see the release of updated versions of existing models, as well as the debut of 3 brand new electric vehicles, according to analyst Edison Yu. While Q2 deliveries were down from Q1, NIO reported mixed profits on September 7 and issued a more optimistic outlook. It is anticipated that NIO will see a significant uptick in Q3 and monthly record deliveries in Q4. NIO deliveries were affected by the China COVID lockdowns, supply challenges, and a stale EV portfolio. The full-size ET7 sedan, the intermediate ET5 sedan, and the compact ES7 SUV are all brand new or soon-to-be-released electric vehicles. NIO plans to export some of its vehicles to Europe. The ES6, ES8, and EC6 SUVs are all older models. NIO ET5 shipments will start on September 30. Based on the exceedingly favorable feedback from early buyers, Yu of Deutsche Bank predicts that the ET5, which is being seen as a competitor to the Model 3, will become a best-selling premium model. While NIO's current focus is on the luxury EV market, the company is considering a cheaper model for the mainstream market. The long-awaited low-cost NIO EV may finally find an audience. From 2024 forward, NIO also intends to manufacture its own battery packs. Stock analysis for NIO. NIO stock is still trying to bottom out at a 24.44 purchase price. After finding support at the 50-day moving average, NIO jumped 3.7% higher on September 19 to $20.89. The once-hot EV stock has fallen due to multiple issues, including supply problems, and is now trading more than 50% below its 52-week high. Within a protracted downturn, the relative strength line of NIO stock is strengthening. For most of 2020, it rose substantially. If the RS line is going up, it suggests the stock is doing better than the S&P 500. In the graph, it appears as a blue line. The IBD composite rating for the stock is 32 out of a possible 99, which is very low. The rating is a holistic value based on a variety of fundamental and technical indicators. Having only outperformed 27% of all companies in IBD's database over the last year, NIO has an RS rating of 27. Accumulation and distribution score of A for NIO demonstrates large investors' enthusiastic purchasing during the previous 13 weeks. There were 883 funds holding shares as of June. According to the IBD stock checkup, NIO stock has not seen a quarter-over-quarter increase in fund holdings. Analysis of NIO earnings and fundamentals. NIO falls short on basic criteria like profits and market value. It's a new, rapidly expanding business that's still trying to find its footing financially. The EPS rating for NIO stock is low at 2. Earnings per share is a measure of a company's profitability relative to its peers. On a scale from A+ to E, NIO has been given an SNR rating of D. Sales growth, profit margins, and return on equity are all included in the SNR rating. NIO's quarterly losses ballooned to 20 cents per share on September 7. Sales increased by 22%, which was better than expected, thanks to a 14% increase in EV shipments. Given ongoing supply problems, the company's projection for 31,000 to 33,000 EV deliveries in the current quarter was better than expected. In Q4, NIO anticipates a significant increase in production and record-breaking quarterly deliveries. NIO's losses are forecast to increase to 64 cents per share in 2022, according to a survey conducted by FactSet. Forecasts indicate a 43% increase in annual sales. As a result of the introduction of new models and the penetration of new markets, they anticipate that NIO's losses will be drastically reduced to 29 cents in 2023. NIO more than quadrupled EV sales in 2021, despite supply difficulties caused by a pandemic. A total of 34 out of 36 analysts covering NIO stock recommend buying it, while the other two recommend holding. Increased rivalry in China's electric vehicle market. To that end, NIO is aiming its luxury electric SUVs and automobiles toward the Chinese consumer market. Even though Tesla dominates the electric vehicle industry, Chinese EV companies are quickly becoming formidable rivals. When compared to other up-and-coming automakers, Tesla is now considerably outselling competitors like NIO. As of 2023, NIO is expected to release a mass-market sub-brand. Electric vehicles, EVs, manufactured in China are sold to customers all over the world, including Tesla, General Motors, Ford, and Volkswagen. In the first half of 2022, Volkswagen outsold NIO in the Chinese electric vehicle market. Another company to keep an eye on is BYD, a Chinese electric vehicle behemoth. And even Tesla is starting to lose momentum in China to BYD, which is financed by Warren Buffett. NIO CEO William Li predicts that by 2030, electric vehicles would account for 90% of all new vehicle sales in China. NIO is developing internationally, while also increasing its production capacity in China. It now only operates in Norway, but by 2025 it hopes to have expanded to 25 nations worldwide. As part of a larger rollout in the region, NIO has begun sending ET7 cars to Europe. Both BYD and Xpeng have established a presence in Norway, and BYD has plans to make a significant push into Europe and other countries by the end of the year. Li Automobile plans to expand into the European market. As a result, Chinese electric vehicle manufacturers are now serious competitors to Tesla and other Western automakers in Europe. At home, Chinese rivals NIO, Li Auto, and Xpeng are growing in number to take on Tesla. According to the International Energy Agency, EV sales worldwide more than quadrupled in 2021 from the previous year, with China serving as the driving force, IDA. However, in 2022, both NIO and other China EV manufacturers suffered owing to COVID lockdowns and restrictions, as well as chip shortages and other supply chain difficulties. NIO has introduced a novel battery subscription service. NIO basically offers its automobiles and its batteries as two independent products. NIO EVs may be rented by customers for a monthly cost or bought without batteries at a discount. If they need to, they may even trade automobile batteries. More than 10 million battery swaps have been completed at NIO's 1,047 battery swap stations in China. It has introduced battery swaps in Norway, giving Tesla furthermore competition there. Is it time to buy NIO stock? NIO, a Chinese electric vehicle EV business, has been losing money for quite some time while having impressive sales growth. China is the world's largest market for electric cars. Therefore, its strong brand strength in China positions it to be a serious competitor to Tesla in the years to come. With the release of additional electric vehicles and the company's continued worldwide expansion, NIO has more room for development. However, competition between BYD and Volkswagen, on the one hand, and Tesla and NIO, on the other, is heating up in China. With the release of their new models, NIO is expecting a surge in EV sales. However, following the chip issue, battery supply may provide an even greater challenge for EV stocks in general, although NIO's intentions to enter the battery industry may provide some protection. After taking a beating, NIO stock is expecting a hard road to recovery. The promising and fast-growing EV stock has been trying to break through a fresh purchase target of 24.44, but is still well below the entry level. That's all for this video. Let us know in the comment box what you all think about this video. Like it and share it with your friends. Also, subscribe to our channel and hit the bell icon to get the notification of our latest videos. Thanks for watching.